All right, everyone. Ready to dive into a topic that I think a lot of people find kind of mysterious. Credit scores. You know, that three-digit number,
Yeah.
the one that can totally make or break your chances of getting a loan. We're going to go beyond just the basics today and really explore like the whole story of credit scores, where they came from, how they actually work, and even like the bigger impact they have on society as a whole.
It's a lot more than just the numbers.
Yeah, for real. And to help us out, we've got a whole stack of YouTube videos to guide us. Some are from like the big names, Bank of America, the Federal Reserve Bank of St. Louis.
The heavy hitters.
Exactly. But we also have some from like personal finance gurus and, get this, even a sociologist's take on credit scores, which I gotta say, I am really curious to hear.
Yeah, that's what I think makes this deep dive so interesting. We're not just like crunching numbers. We're really looking at the whole context, like how these scores actually function in the real world.
Totally. Okay, so to kick things off, I was seriously surprised to learn from this one video what your credit score actually means.
Yeah.
That credit scores like haven't always been a thing. Could you even imagine a time when you had to like personally know your banker to get a loan?
It's hard to believe now, right? But yeah, before credit scores became, the standard, which was really only in the late 20th century, lending was a much more local thing. It was all about who you knew, your reputation in the community.
Yeah. They even showed this handwritten credit report for R.H. Macy, like the Macy's guy.
Wow.
Right? It's like someone was literally writing down notes about your spending habits and then like sharing the gossip with other businesses.
Wow, that does highlight how much things have changed, doesn't it?
For sure. So how did we go from like handwritten reports to this credit score that everyone freaks out about?
Well, as lending got, more common and a lot more complicated, there was this growing need for like a standardized way to size up whether someone was a good risk. And that's where credit scores came in. They promised this objective measurement based on your financial history.
Okay, that makes sense. So let's break down like the modern system. We hear about FICO and Vantage Score all the time. Are those just like different names for the same thing?
They're both, credit scoring models, and honestly, they're more alike than different. They both use pretty much the same info from your credit report, but their algorithms are a little different, which can mean the scores vary a bit.
So it's kind of like if two chefs use the same ingredients to make, I don't know, chicken parmesan, the dishes will be pretty similar, but each chef has their own little techniques, right? So the taste might be a tiny bit different.
Yeah, that's a great way to put it. That's the basic idea of why you might see a little difference between your FICO and Vantage score. But in the end, they're both trying to answer the same question. How likely are you to, pay back the money you borrow?
Okay, and how do they figure that out? Like what exactly goes into these scores?
So there are 5 main factors, and this video, how a FICO credit score is determined, breaks them down really well. It's like a recipe, for your financial health.
Ooh, I like that. Okay, so tell me more. What's the most important ingredient in this recipe?
The biggest piece of the pie, it accounts for like 35% of your score is your payment history. If you consistently pay your bills on time, that's huge. It's like showing up for work on time every day. Shows you're reliable, you're trustworthy.
Yeah, that makes total sense. I mean, if I was lending money, I'd definitely want to know if someone always pays late. What's the next biggest factor?
It's the amount of money you owe. That makes up about 30% of your score.
Mm-hmm.
And it's not just about, how much debt you have. It's about how much of your available credit you're using.
Oh, so it's not about being completely debt-free. It's more about, like, managing it responsibly.
Exactly. There's this great analogy in the Credit Score Explained video. They talk about credit cards. Like, if you have a low balance compared to your limit, that shows lenders you're not maxing out your cards and living way beyond your means.
So it's like not piling your plate up to the sky at a buffet. You could, but probably not the best idea.
Right.
Okay, so what about the other things that go into your score?
So we've got the length of your credit history, which counts for about 15%. Basically, the longer you've been using credit responsibly, the better. It's kind of like building up a solid work history. The more experience you have, the more confident employers are going to be about your abilities.
So does that mean closing old accounts, even if they're paid off, is maybe not such a good idea?
It might not be. It could actually shorten your credit history and, potentially ding your score. It's not just about like wiping out debt. It's more about showing that you can consistently use credit in a responsible way.
Gotcha. Okay, what about the last 2 ingredients in the credit score mix? What are those?
All right, so next up is your credit mix, which is about 10% of your score. Lenders like to see a mix of different types of accounts, mortgages, student loans, credit cards, stuff like that.
Wait, so why does it matter what kind of credit you have? Isn't all debt kind of the same?
Not really. Having like a variety of different types of credit shows that you can handle different kinds of financial responsibilities, like responsibly. Think of it like having a really diverse skill set. It makes you more well-rounded, more valuable in the eyes of lenders.
So it's like showing off how financially versatile you are. I like that. Okay, last factor. Hit me with it.
The final piece is new credit. This one also makes up about 10% of your score. Now, applying for a ton of new credit in a short amount of time can actually hurt your score. It can
Right.
make lenders nervous, like maybe you're desperate or you're not stable financially.
Right, like you're grabbing for every life preserver you can find. In the video, How to Start Building Credit from Scratch, they talked about hard inquiries, which are basically like little notes every time a lender checks your credit. So too many applications all at once can be a red flag.
Yeah, exactly. It's a tricky balance. You need to use credit to build your score, but going overboard can totally backfire. We can dig into building credit a little later. But first, I want to go back to something you mentioned earlier.
You mean how credit scores are like a fairly recent invention?
Yeah, exactly. That historical context is super important because it helps us understand how the whole system came to be and how it might not always be the best reflection of someone's actual financial situation. The video, What Your Credit Score Actually Means, had some really interesting stuff about the social side of credit scores, and I think that's a good place to go next.
Absolutely. I'm really interested to hear what the sociologist has to say. It feels like we're about to move past just the numbers and really get into the human side of all this. Okay, so we've talked about like the history of credit scores and how they actually work, but now I kind of want to shift gears and talk about the impact these scores have, on people's lives. Like, what does this all mean in the real world? This is where I think that sociologist's perspective is going to be super interesting.
Totally. It's easy to get caught up in all the technical stuff, but yeah, we got to remember these scores have real consequences for people.
For sure. I mean, in that video, What Your Credit Score Actually Means, they shared this story about a single mom who got denied for an apartment just because she didn't have a credit score.
Oh, wow.
And she could afford the rent and everything, but because she didn't have a score, they just automatically said no.
It really makes you question, how much we can rely on these scores to tell us if someone's actually responsible with money. That video argued that a lot of times credit scores don't really paint the whole picture, especially for folks who maybe don't have access to traditional credit or just don't use it the same way.
Right. So like if you mainly use cash or rely on like those informal lending networks within your community.
Exactly. Like paying your rent and utility bills on time, month after month, that's super responsible, right? But those things don't usually show up on your credit report.
So it's almost like the system favors certain ways of handling money and ignores other ways that people show they're trustworthy. Makes you wonder if we're really measuring responsibility or just like participation.
Yeah, that's a great point. And, the video argued that these biases, they have historical roots. Think about all those discriminatory lending practices in the past. Even though they're illegal now, they had a huge impact on which communities could access credit and therefore build up good scores.
That was one thing I found really eye-opening, like how historical injustices are still affecting things today. They talked about how Black soldiers returning from the Korean War were often denied those GI Bill benefits that their white counterparts got. The ones that helped so many white families buy homes and build wealth over generations. Black families were shut out of those opportunities.
Yeah, it shows how even systems that seem totally neutral can actually perpetuate those inequalities, and you can see that reflected in credit scores today. The video pointed out that over half of Black adults have a credit score below 650, which means they end up paying higher interest rates or just getting fewer loan offers in general.
It's like this vicious cycle where people who were already disadvantaged have a harder time achieving financial stability because they never even had a chance to build good credit.
Exactly, and it goes beyond just loans and mortgages. The video even mentioned that more than half of U.S. employers now use credit history when they're making hiring decisions.
Seriously. So a low credit score could actually cost you a job even if you're like totally qualified.
That's right. It raises some serious questions about, whether we're using these scores for things they weren't really designed for and whether it's fair.
It definitely feels like we're stretching the definition of what a credit score is supposed to tell us. So what can we do to make the system more equitable, more fair? The video mentioned some possible solutions, right?
Yeah, some cities and states have actually started banning the use of credit scores for things that aren't directly related to lending, like jobs or insurance. It's a way of acknowledging that credit scores don't tell the whole story about a person.
That makes sense.
Yeah.
What are some other things people are trying?
Another interesting idea is making those informal lending circles more official. You know, the ones that are already common in a lot of communities, especially where people don't have access to traditional banks and stuff. These circles are basically groups of people who pool their money and take turns receiving the whole amount.
Oh, yeah, I've heard of those.
So the thought is, if those payments were reported to the credit agencies, it could help people build up good credit.
That's so smart. It helps people support each other and build credit outside of, the regular system. Were there any other solutions that stood out to you?
There's a bunch of new companies out there creating alternative credit scoring models. Some are even using things like rent payment history and utility bills to assess creditworthiness. So instead of just looking at, banks and credit cards, they're trying to get a more holistic view of someone's financial behavior.
I love that. It's like acknowledging that people show responsibility in different ways. Are these alternative models actually gaining traction?
Yeah, they are starting to make some noise. Some lenders are beginning to use them in their decision-making process. It's early, but it's exciting to see these innovative approaches challenging the old way of doing things.
It feels like we're finally seeing some real momentum toward creating a credit system that's actually inclusive and equitable. So as we kind of wrap up this part of our deep dive, what's the most important thing you want our listeners to take away about this whole social impact side of credit scores?
I think the biggest takeaway is just realizing that these scores, they're not just numbers. They have a real impact on people's lives, and they can reinforce those existing inequalities that we see. We have to be aware of these limitations and really push for change.
I couldn't agree more. Well said. Okay, let's move on to the final part of our deep dive. We'll tie everything together and look ahead to what the future might hold for these little credit scores. Okay, so we've been on this journey through the whole world of credit scores, the history, how they work, and even, the impact they have on society. It's been pretty eye-opening, to say the least.
It's crazy how much there is to learn about these scores, right?
Yeah.
And to think it all comes down to this 3-digit number.
Right. So as we wrap up this deep dive, I'm just thinking, what's the big takeaway here? What does all this really mean for us?
Well, there's this one point from what your credit score actually means that really got me thinking. They said that, in today's world, access to credit is practically a necessity.
Yeah, it's not even just about getting loans anymore. It's like renting an apartment, getting a job, even getting insurance can be affected by your score.
It really can feel like this invisible force that's, shaping our opportunities,
And like we talked about, the system, it's not always fair. Those historical injustices and the biases that are baked in are still a huge problem. And unfortunately, it's the marginalized communities that are hit the hardest.
It's true. And it just shows that even systems that seem totally objective, like credit scoring, can actually make those inequalities even worse. But the good news is that people are starting to pay attention to this, and they're looking for ways to fix it.
Yeah, and we talked about some pretty interesting ideas like banning the use of credit scores for things that aren't about lending, like jobs and stuff. And also making those lending circles more official so people can build credit that way. Oh, and all those new companies coming up with alternative ways to calculate scores.
It's all about shaking things up and making a financial system that's actually fair for everyone. And we all have a part to play in this.
Absolutely. I mean, first we got to understand how these scores work. But then it's about building good credit habits and, speaking up and advocating for change.
Exactly. It's about realizing how much power this little 3-digit number has and making sure it works for everyone, not just a select few.
Throughout this whole deep dive, I keep coming back to this one question from that video. If credit scores are supposed to tell us how trustworthy someone is financially, are they really doing that in a way that's fair and equal for everyone?
That's the big question, isn't it? And it's a conversation we need to keep having.
Well, I think this deep dive has given us a lot to think about and hopefully some good ideas for how to move forward. And for our listeners out there, hopefully you feel more equipped to navigate the whole credit score world with a little more confidence and awareness.
Remember, it's not just about the number, it's about the bigger picture too.
Well said. Thanks for joining us on this journey into the world of credit scores, everyone. Until next time, keep diving deep.